project management, time management is absolutely critical. Having your ducks aligned to your KPIs, like knowing what your KPIs are for that day, let alone that quarter, is going to be critical, because regardless of the business type and the revenue model, we're all human.
Yes.
So do people want to be treated fairly or not? Sometimes, perhaps not often. The founder is often the CEO. And during that time, he or she may have never led people before, may have never managed people before. Nevertheless, addressing those basics that I alluded to, and being humble enough as an entrepreneur to say, am I the right person for this? Because being everything to everyone never really works out.
Welcome to the Sandpit Startups podcast, where we journey into the minds of the brightest and the best the region has to offer. We're here to connect the entrepreneurs in the studio with the entrepreneurs sitting at home. And we sincerely hope the next half an hour inspires, motivates, or educates you. And if it does, you know where the follow button is.
We are happy to have Elliott Denham, who is the program manager of SandBox, a landmark program from DTech Ventures. This startup program equips founders to unlock their full potential and aids them in their 0 to 1 journey, with all the necessary tools to make this program a one-stop shop for all startup founders. We'll speak with Elliott today and find out about the intricacies on how a startup program works, how they work with entrepreneurs, where they get to see millions of ideas over a year with many pitch decks, and also understand the journey, the pitfalls, and even more. Thank you, Elliott, for joining us on the show with us today.
Abhi, Sam, pleasure to be here. Thanks for having me.
Awesome. Let's get into it.
Sure.
Let's start with my favorite question, which is, I really have a strong affinity towards startup programs, because I feel essentially they provide 3 types of capital. One is human capital, which is through mentors. Then there's the network capital, a community of startup founders. And third, it's financial capital, access to VCs. Mm-hmm. So if you could share how startup programs provide these resources, and take example of SandBox also.
Yeah, sure. So you're spot on. Ultimately, a startup program is a period of time or a metaphorical sandbox to experiment, learn, test, pivot, grow, fail, get back up, and do so with resources, particularly knowledge-based resources around you to help guide you and accelerate your learnings. In the instance of SandBox, the program that we run at DTech Ventures, essentially we've built the program around 9 pillars, and we designed the program duration, the structure, the way it's delivered from scratch, simply with one thing in mind, which is, what do founders want and how can we best resource it?
Okay.
And we didn't make it about DTech Ventures. We made it about founders. And that's something that I think shines through on a day-to-day basis from the founders involved in the program. It is a really founder-centric program. And that's a top secret, I would say. Top public secret number one. The more founder-centric a program can be, most likely the more valuable it will be to the founders. In terms of those 9 pillars, the way that we go about it, we have product and tech, traction, scaling, legal, finance, commercial viability, investor relations, growth marketing, and uniquely wellness. So these are 9 pillars that the founders and their teams can tap into in terms of workshops, content delivered to them to learn from, and or one-to-ones that we fund the time for. And across those 9 pillars, if you're a savvy entrepreneur with very clear goals for your week or your month or your quarter, you're able to pick and choose across those pillars and tap into the resource from those pillars accordingly. And that's ultimately what SandBox offers, amongst many other things, to the founders. But I will say, as with anything in life, the more you put in, the more you get out. So a typical program is there and designed and structured for the founders to squeeze the fruit. But if they don't turn up and they don't attend, or they're not necessarily focused on their priorities for that week, or chasing their tail that month, then they're not going to be able to yield the juice of that squeeze for that particular instance of time, and then time is wasted.
Yeah, they're only lying to themselves. It's interesting because oftentimes we talk about what investors want from founders, but the whole idea of what founders want just goes on by. No one talks about it.
Yeah.
And I know you mentioned the courses, or the program is always centered around what founders want. So what do they want? What are the top things that founders are looking for?
What do founders want? They want two things.
Money.
They want sales, so revenue, and they want fundraising capital.
Definitely.
They're the two main things that founders want. But the reason we've included wellness as a pillar in our program, to place equal emphasis on wellness as much as accounting and legal and scaling and product development, is because actually those who are best performing objectively in a lot of VC portfolios, including our own, are those that are well balanced. They have good retention. They have a great employee culture, a fair work-life balance.
Yeah.
And so part of the reason we included the wellness pillar is because it encourages founders to determine actually what they do want, and what they want or need, perhaps, within the shorter term goals of timelines of a week or a month or a quarter, as opposed to, I've got this idea, I've got to build a pitch deck, and now I've just got to go raise. It's like,
I think
let's get some pieces of the puzzle in place before that happens.
I think that's really wise, because all of a sudden you could have rotten foundations, blow something up, like in terms of growth, and then all of a sudden you've got this massive thing with a horrible culture, which is a nightmare to turn around, right?
It could get toxic also,
Yeah, so it's way better to start with the foundations and get that done first.
Well, yeah, I mean, again, with any project, whether it's related to startups or not, getting those foundations in place, although especially in startup world, things can be scrappy at the earliest stage, particularly when you're proving an MVP or iterating an MVP, but that's a separate discussion. Getting those foundations in place is going to be critical to the future of the business. But most likely the founder or the founders have not yet necessarily the experience to be able to understand what is right for that foundation to then, because it could impact them in a certain capacity or manner, 6, 8, 10, 20 months out. That's why programs and mentors who've got lived experience can be massively beneficial.
That's interesting, because startups are typically quite a volatile place, and a lot of chopping and changing can happen, especially in the first couple of years. How do you build a good culture with people leaving and coming in so often? Or maybe that's it, like they shouldn't be coming in and leaving so frequently.
How should founders build a good culture? I mean, at the end of the day, regardless of the business type and the revenue model, we're all human.
Yes.
So do people want to be treated fairly or not? Do they want to feel respected or not? Do they want to feel like they have stretch goals or not? Do they want to feel complacent or not? And generally the answer is no. They want stretch goals. They want to feel well reimbursed, and a culture that pushes them, and there's a sort of collaborative effort amongst the team that everyone is pulling their weight. So addressing those key issues from day one, and giving people autonomy, not micromanaging, because often, sometimes, perhaps not often, the founder is often the CEO. Or the founding team are often the executive leadership, especially in the early stages, maybe all the way up to pre-Series A, Series B even, before perhaps, for various reasons, they can't take it to the next level, and then maybe a different CEO comes in. And during that time, he or she may have never led people before, may have never managed people before. And consequently, just because they're the founder, they end up being the CEO, which is fine for the time being if you're a 1-2 man band, but perhaps they're not best suited for attracting 20, 30, 50 people. Nevertheless, addressing those basics that I alluded to, and being humble enough as an entrepreneur to say, am I the right person for this? Because being everything to everyone never really works out. And being humble enough to go, this is where my strengths are and this is where my weaknesses are as a founder, as an entrepreneur. And I need support in X, Y, and Z. I'm going to go and seek that support from a program or otherwise is critical.
And one common thread let's say with the startup programs that I really appreciate is while I was in Madrid and also in Dubai is basically the opportunity you get to pitch in front of investors, like a demo day where you would have industry experts or could even perhaps be the first partner or the first customers that you can pitch to. This publicity, let's call it that, allows the founder to prepare themselves for, let's say, future rounds of funding, or it's like an introduction to the market, like here we are ready, and this is what we can do.
Correct. I would agree with that. And, you know, any publicity, as they say, no publicity is bad publicity. And I think that ultimately the real value, especially at pre-seed stage, for entering such competitions or exhibiting or being on podcasts like this is to get feedback. Getting feedback from the market, from ideally your target prospect, to be able to iterate, not going out and saying, I'm raising, I'm selling, like buy my product, but actually like, is what I have the optimal solution to the problem for this niche defined group of people? And that's where those sorts of events and things can help.
I agree more.
If you look at sort of companies like Zoom, for example, where they're solving something that is an issue, like for example, when COVID came about, people all of a sudden had to pivot to online communication. The thing is about Zoom, actually, they were around for a very long time before COVID happened, but they were actually ready to fulfill that need for when it came. So they're in this really interesting, and who knows if they like meant for that to happen. They'd probably say that they would, they did. But sort of like, are investors looking for tomorrow's solution, or are they looking for something that fills a need right now?
Oh, that's an interesting question. So just going back a little bit on the foundations piece, it's building the foundations for a culture is imperative to be able to attract good talent and retain good talent, but and inherently, hopefully, build a culture that builds good products or solutions to problems. But equally, building a foundation for a lot of other processes related to the business is critical in the early stages so that you can scale. And often there's a lot of cracks when you start scaling because for better or worse, the foundation wasn't laid really solidly. And that's where the value of startup programs and mentors sort of come in, amongst others. But that often isn't found out until they're scaling. And in order to scale, they've got to have a good, decent product base, client base, decent product market fit, and ideally some form of capital to be able to go on that scaling journey. And consequently, VCs or investors will only find that out at that stage, unless they've done really thorough due diligence, which is critical nonetheless. Are investors looking for to solve the solutions of tomorrow or the needs of today? It really depends, and there's no black or white answer to that. It depends on VC or investor to investor, simply based upon their investment thesis, their risk appetite, and ultimately, founders need to realize that VCs have a job. Yes, they have a bit of power because they've got capital to deploy, but it's not that necessarily their capital. And so their job is to return the funds of the LPs and make a profit. And that's a very, very difficult job to do, especially with asset classes like early stage entrepreneurs. Early stage startups, when you've got asset classes that are much more well established, like property or gold or things like that, which have a good history to them, like a long backdated history. So do they want to solve for the needs of today or the needs or demands of tomorrow? It depends upon the investment thesis, their risk appetite. Nevertheless, ultimately, they need to be returning
Yeah.
funds.
Mm-hmm.
They
They have
need
to
to
keep the
be
bigger picture in mind,
looking at ways that they're going to make their LPs happy and profitable and rich, I guess, so that they can then raise a second or third or fourth fund. Without being able to do so, then it becomes a charity, I suppose.
Yeah.
Yeah, you just touched upon mentors and mentorship. A good mentor usually sees the potential in startups even before the founders do. So, according to you, having the right mentor, how does it impact a particular venture?
So when you say a mentor identifies the opportunity or the potential of a startup before the founders do, what do you mean by that?
Usually, the mentors either have previous experience in a particular field. For example, if they were in property tech and they see a startup which is into property tech, they have the passion, they have the background to make it work, but sometimes they don't see how to probably direct this project forward. And the mentor mentally already knows perhaps he's done that in the past or has been successful doing this in another market, and then says, okay, here I am. Let's brainstorm and let's see how we can make this work. That's how I have seen through personal experience.
Okay, yeah, no, understood. That's clearer. To me, mentors are critical in life, in any form of project where there's a start point and an end point that requires growth over that journey. And the mentor-mentee relationship often can be formal, could be completely informal, may be paid, may not be paid, but needs to have some form of expectations and boundaries, I would suggest, and perhaps even a timeline. And there's no need to have a mentor-mentee relationship if the goals have been achieved and the mentor is no longer able to support, or the KPIs are different.
Yes.
And it's like, cool. Well, we achieved what we achieved, and we had our agreement, whether it was equity, cash, or nothing, and we'll move forward and be very respectful and appreciative of that.
In that case, do you think you should have like multiple mentors, not at one time, but like maybe
at
for
different stages?
Yeah, for sure.
As you outgrow one.
For sure. I mean, like when we grow up, we go to nursery school. So whoever teaches us at nursery is trained for us at nursery. Whoever looks after us or teaches us, guide us at primary school may just be one or two individuals. Then you move to secondary school and you have subject-based teachers.
For the subject.
The same sort of thing relatively applies. Equally, a mentor is a human as well. They have a capacity and they have specialism. So there may be a specialist in startup fundraising. They may be a specialist in tax. They may be a specialist in legal issues pre-Series A. They may be a specialist in hiring. They may be a specialist in Google Ads, whatever it may be. So consequently, it's worthwhile having multiple. And again, that's where the likes of programs that have vetted mentors and people who have an innate interest in helping the startup succeed can be really valuable for entrepreneurs, especially when they're starting to navigate the landscape of the world of entrepreneurship, which can be very, very difficult and opaque, and also at times quite lonely.
You say it's very difficult, but then you speak and then you just reference things that are very, very simple, such as like, oh yeah, people are human, therefore you need to treat them right, therefore there's your culture. Then it's like, school is mentorship. So sounds very simple when you break it down like that.
Well,
I think that's just the way that you speak, and it's
perhaps,
nice. It's nice to hear. Look, a big fear that I think a lot of founders have, especially in like the very first stages, is the idea being taken, or at least after they get the pre-seed funding and they start to like gain a lot of traction, they perhaps like get spotted by the bigger competition. I think the main fear is that it's going to get stolen. And we were talking just a bit briefly off camera. You were saying there's some safeguarding techniques that people can use. What are they?
Safeguarding techniques to ensure your IP doesn't get stolen, you mean?
Yeah.
I think you'd probably best need to speak to an IP lawyer. Perhaps you bring them on next time. But ultimately, I'll try and go a little bit more high level here and address the issue of like ideas being stolen. Ideas are abundant and execution is sparse. That's the reality. Why do these startup competitions, these startup exhibitions, etc. exist? They exist to raise awareness and raise exposure. And the better entrepreneurs utilize these such activities to be able to get feedback.
Yes.
And they'll be able to gather all that feedback, whether they agree with it or not. It actually doesn't matter. They're just gathering that feedback to ultimately validate or not a hypothesis.
Yeah.
And then using that to build a product roadmap.
Exactly.
And then off they go. And building, hopefully, and selling to clients and getting more feedback. And it's the iterative process, goes round and round, and it never stops. So when it comes to ideas, most likely, no one is going, it's not no one, but most likely the idea is not going to be replicated or stolen per se, because it's very difficult to put a trademark or any form of legal protection over an idea in most jurisdictions. And equally, if you had an idea and I thought that's a good idea, but I've got my life, either I can ignore the idea, I can give you some guidance on the idea if you wish, whether you ask for it or not is a different story, and then or I could steal the idea. But if I stole the idea, I have to give up what I'm doing from my time, ROTI, return on time invested, to try and essentially copy, compete, steal your idea. And even if I did, I would do it in a different approach because we have different experiences and angles and networks. So I wouldn't really, overall, I would say, unless you've got some very, very, very strong IP that is technically can be protected, and that IP is the differentiator for your business, then speak to as many people as possible to get feedback, because most people would be more interested to support and help and give feedback rather than redirect their lives to a mission that perhaps they've just learnt about. So I'd say don't be too fearful of that.
And as Elliott mentioned, right, the ideas I feel are usually a commodity. Execution is what matters. For example, DoorDash existed in the States, but then Foodpanda just copied the idea and started in a different market. But what was important was to have the capacity to start this in a new market, expand it. And we've seen examples over here also. We had Souk, which now is Amazon. You have a Kareem, which was basically doing what Uber is. But it will happen. It tends to happen because a particular idea could be new in a different market. But it's, again, as you mentioned, execution. And there's a lot of value in execution. It's not easy. It's easier said than done.
No question. And that kind of leads to the question about what is innovation, what is true innovation. And most innovation is replication rather than novel invention, let's say. And there's nothing wrong with that. If you can build a profitable endeavor that solves a problem really well and builds a fan base of customers who are advocates and supporters of your solution, why not?
Absolutely.
Yeah, I mean, like, evolution happens over time and it's marginal every single time it evolves. We don't need these like big, massive, you know what, I'm going to invent the next like flying machine or something. Like, changes don't come about like that.
Well, I think we do need them because they're the visionaries, the dreamers that on occasion do materialize. Elon Musk with SpaceX is a perfect example with that. But, he didn't necessarily just come out of the blue with billions of dollars. He earned that, and he worked for decades to be able to establish that dream and then materialize that dream. But I think being humble enough as an entrepreneur to know where you kind of are and also what your aspirations are, and what the reality of what it takes to build what you're trying to build is critical. But I would just add a caveat to that, which is, or an additional note, I would assume, which is to be humble enough to know when it's not working. That's really, really, really hard to do.
It's really hard.
Because your heart and your mind and your time and your love is into what you're building. And if it's not working, the first one to deny that will be the one who's doing it. But actually, the first one to recognize that should be the one who's doing it. And again, the right people around you, the right structure around you, the right support around you can critique and challenge you and make you think in a different perspective.
It's a tough pill to swallow, isn't it?
Yeah,
it is.
There's a lot of emotional attachment with all the sweat and tears and the time invested, and you feel that, okay, probably it's not working. Or sometimes you are too optimal and you think that, oh, it's going to work, I have to give it more time. But as you mentioned, you have to know when it's not working, it's time to move on.
Yeah.
Move on or pivot.
Or pivot, yes.
Yeah, for sure. Especially if you have responsibilities to other employees, other shareholders, investors. You know, if you've taken investment and you're like, it's not working, I'm just going to give up. Unless you're returning them money and maybe a little bit of profit because you have grown, which perhaps isn't the case if it's not working, then they're not going to be too pleased with that.
Yeah.
So that's something you have to be mindful of.
Yeah. It's all about that ROTI that you mentioned.
Yeah, definitely.
Yeah.
For sure.
Yeah, you can't beat a dead horse.
What are the things that usually founders overlook while applying to or later on becoming part of a startup program? Do you see something which is a recurring pattern among founders once they get into the program? Is it that they take it easy, or they think that, okay, I'm part of a program, so that qualifies me to be a successful idea?
I think you hit the nail on the head there, Abby. Like, honestly, that perhaps is the euphoric illusion. You join a program and therefore I'm guaranteed to raise funds. I'm guaranteed to be successful.
Yeah.
That's not the case. Like, congratulations, you've joined a program. Most programs are highly competitive. In SandBox, we have a less than 2% acceptance rate, for example. So well done, you've made it in. But this is where the hard work just begins. And so recognizing that there is a huge amount of resource that you're lucky enough or fortunate enough to have exposure to utilize is number one. Recognizing how difficult and the competition is and how much you're able to stand out is number two. But ultimately, it comes down to you as a founder or as an entrepreneur, if you're in that privileged position of being enrolled in such program, to be able to then, as I mentioned earlier, squeeze the fruit, get the juice out of it, and manage your time accordingly to help you build quicker, pivot quicker, learn faster, get more feedback, etc. So that would be one of the most common things that I see. The other thing is founders may also believe that they join a program, whether it's a SandBox or otherwise, and think that, well, all the VCs are going to come flooding. As I said earlier, VCs have a mandate to return funds to their LPs.
Yes.
The startup may be fantastic, the entrepreneur may be fantastic, but it doesn't fit VC X or VC Y's investment thesis. Therefore, it's just not going to happen. That investment unlikely will be made. Secondly, the VCs have, or any form of investor, have deal flow coming in from multiple sources. You know, it's not unusual for a top tier VC to be seeing between 500 and 1,000 pitch decks per month, and each pitch deck is an investment proposition, investment opportunity.
Yes.
So the founders need to recognize that, you know, it's fiercely competitive. Of course, having the endorsement and support of a program helps pre-vet a startup in the eyes of a potential investor. But at the same time, the work needs to be put in, the work needs to be done, and the value ought to be extracted from the resources available to the founders if they're enrolled in such programs.
So the program actually gives a set of structures and processes to the chaos of building a startup. But there's still a lot of work to be done in the process of earning the validation of customers, which is more important sometimes than earning the validation of investors. And I feel that if you have a founder which has a product fit, you will find investors that see value in it. It's just about doing all the spade work which is needed. And it's not that just because I'm in part of a program is that it's going to come easy to me.
Correct. And equally, a couple of things to add to that. One, programs, at least in our program in SandBox, we're not here to build the business for the entrepreneur. We're not there to make the day-to-day operational decisions. And we're not necessarily even there to handhold them. What we are there to do is resource them in a timely capacity with a huge amount of support and network and people to help them either realize what they need to do and or do what they need to do. We are there to help them set and keep accountable to their goals for that week, month, or quarter or year. But the hard work of navigating the day-to-day is down to the founders. Speaking to customers is never a bad thing. And you mentioned a point, which is impressing customers versus impressing investors. If you impress customers and you make them fans and advocates and ambassadors of your brand, of your solution, inevitably the engine you're building starts to work. And therefore it's going to attract the attention of potential investors, because investors are looking at risk.
Definitely.
Good customers, recurring customers, predictable revenue decreases the risk and increases the potential appetite for VCs or other investors. Why? Because they can potentially yield good returns from step 2, step 3 of getting involved.
Okay. Well, look, we're running out of time here, and it's been an absolute pleasure to speak to you.
Super.
But
Our pleasure.
Is there any last nugget of knowledge that you'd like to throw at our listeners? Anything you can leave them with?
We at DTech Ventures are in a privileged position of having significant exposure to a lot of founders at idea stage all the way through to Series B stage. And with SandBox especially, there's a lot of entrepreneurs who think, I need to apply. If I get in, that's the be all and end all. And actually, as I said, that's just the beginning. Entrepreneurs, whether enrolled in a program or not, often are very tunnel visioned. And that's because they're the world's best specialist in that particular problem and solution.
Exactly.
And that's amazing. There's no one better to articulate the vision and mission and direction of a business than the founders themselves. However, that can also be the Achilles heel. And so being humble enough to recognize like, well, I'm in a depth that I'm not familiar with here. I need to go and seek support is critical. And then the other final thing I would say is like to a founder, project management, time management is absolutely critical. Having your ducks aligned to your KPIs, like knowing what your KPIs are for that day, let alone that quarter. Is going to be critical, because if it's metric driven, you become metric focused in your thinking, and then you become metric focused in your articulation as well to potential investors, to potential customers and things like that. So being able to try and widen the tunnel vision from time to time where possible is never a bad thing. And I think I'll leave it at that for the time being.
For sure.
Well, that's very insightful.
Definitely is.
Yeah. Look, it's been a great conversation. I'm sure the listeners will agree. So Thank you so much for coming on.
No, it's been cool here. Thanks, and it's great what you're doing for the ecosystem. I look forward to listening to future episodes as well.
Much appreciated.